Hey, what's up, everybody? It's your mortgage expert, Brian McCauley here. So you're looking to buy a house in DFW in 2025 and you can't make up your mind because you're unsure and want to know when are these mortgage rates actually going to come down for good? Stick around. In this video, I'm going to tell you everything you need to know. So it seems to be a broken record around the country, DFW specifically, when it comes to these mortgage rates. When are they going to get unstuck? They start to trend down, they pop back up. Things lately have been tough with the tariffs and some international exchanges. We had Moody's that obviously downgraded the U.S. credit. And so they are heading in the right direction. In the right direction, I mean down. They just don't stay down as long as we'd like, and they tick back up. But you know, they've improved overall in the past 6 months, probably at least 0.5% plus. And so depending upon the time that you obviously watch this video, they've been hanging around an average of 6.75, sometimes 7%, sometimes 6.5%, but 6.75 is I think is a good average. The new administration has a lot of things that they are working on, and there are just a lot of moving pieces. And my belief is once the tariff stuff settles and once some of this policy gets out in public and it's set in stone, I've been told personally there's a ton of money on the sideline. There's a lot of Wall Street investors and people that are just waiting to figure out the direction of the country and a direction of some of these policies. And so once that stuff happens and people know exactly what the outcomes are going to look like towards the back half of the year, you'll start to see different markets get better. And that's because people will get clarity and investors will start putting money in the markets. One of those markets I think that will get better is the bond market. The bond market's having trouble right now because there are so many things that's correlating to the bond market on trades that it can't seem to figure out exactly which day it wants to go up or down. That's because of the tariffs and, Moody's stuff and the trades and investors. And so why it's been about the same up and the same down as a wash, it's just very inconsistent. So sometimes things change per day, sometimes a couple times a day. That's never great for clients because you may be shopping on a Monday and rates may go up or down 3 or 4 times that week. So I tell everybody, if you're pre-approved, I wouldn't worry about it that much. It's once you get under contract where, your time period starts and you got to figure out in that maybe 30-day window when you want to shop and when you want to obviously lock for an interest rate. So how long is this going to be like this, right? How long are rates going to be in the 6, 7, 5 range? Could they go back up? Yes. When we think that they'll eventually let a little bit of the air out of the balloon, they start to come down for good. So my belief on that is probably going to end up being Q3 to Q4 of 2025. I think they'll ultimately settle somewhere in the low 6s, maybe 5.99, maybe 6% Christmas of this year. As much as I would like interest rates to drop dramatically because it would boom everything in our business and make me some extra money, it's not actually good for the housing market. It causes too much of a surge. I think what I would like to see over the next 18 months is a slow and steady decrease. I'd like to see interest rates go down 0.25% each quarter of the year. I think on the back half of the year, we'll start to see that. I think we have a few more months until they start to unstick, but I think you really see some decline for good in Q4 of this year. And I think 26 is going to be the year that people see two things. One, a lot of economic growth and boom based on policy. And two, I think you'll see interest rates to continue to decline. And I think the bottom itself is probably going to be somewhere Christmas 26. I'm going to call it 5.25%. So in between today, 6.75, and Christmas 26, 5.25, that's a 1.5% gap. That's a lot of spread. Could happen sooner. I hope it does, but I think that's when we'll see probably the bottom. Now, what does that mean for you as a potential home buyer out there? Don't wait for interest rates to get extremely low in order just to buy a house. You buy a house if you like the house and you get a good price on it. Also, if you wait until interest rates get to the bottom, every other buyer has the same idea. You'll have too many people come off the sidelines at once, and you'll have 5 people going after one home. And while you may get 5.5 rate, that home's going to be 10 to 15% more. You're going to way overpay for the house. That's going to offset some of the savings in the interest rate. It's better to buy now if you can get a good deal. What we are seeing right now in the buyer profile that we're helping people the most with are clients that are finding a house that's been on the market for 2, 3, 4 weeks or months, and they can get the seller to play ball. And they are getting a concession from the seller, and they are able to use some of that money to do a temporary interest rate buy down. This is the most popular thing we've had going last year. It's the most popular thing we've had going this year, where if the interest rate's 6, 7, 5, and they can get a deal on the house and they get 15, 20 grand from the seller, they can buy that rate down to 4.5 or maybe 5.5% for a year or two and have really, really cheap payments, really future interest rate payments at today's market at the expense of the seller, including with the house that they want. And so it gives them a nice little bridge over the next two years to have really, really cheap payments. So that's the the style of person we're helping the most. A lot of people aren't aware of temporary buy downs, but in a market that's lukewarm, sellers are willing to do deals and they're willing to give money. I mean, if you can get money from them, do not take it off the price of the house. I would get it as a seller concession, save money for closing costs, use it to buy the interest rate down. So you got super cheap payments for the next couple of years. And what's cool about the temporary buy downs is if you end up refinancing or moving or selling or doing whatever, and you don't need all 24 months, whatever the difference is that's left over, it comes back as a refund to the consumer. So it's not in vain. So again, I think interest rates are in a good space. I think 6.75 is good. I don't think it's great. I've seen some things as low as 6.25, maybe 5 down now with a point. So they're starting to move in that positive direction. They just can't stay there for long, because I think, all the situation with the tariffs and economically everything that's going through with the bills trying to be passed, it's still unclear what's going to happen. And so when you've got confusion and you can't get clarity around, what's going to happen the next month, these markets tend to sway and move. And this is why you're seeing things up and down so much. There has been a pretty good run for a few weeks over the past probably 6 weeks, to where rates have dipped down dramatically for 3 days. And every client that we had that was under contract, we said, hey, let's do a lock strategy session. I don't think Monday's a good day. We've got some new data coming Wednesday, Thursday, Friday. Let's watch it. And we were correct in that the rate dropped from 6.75 down to 6.2. We locked them. It may have gone back up after the fact. So that's something else to keep in mind. Just because the rates are where they are today, they go back and forth and up and down so much that if you've got a contract in your closing days, 30 days, the likelihood of you finding one of those pockets for rates dropping is really, really good. You just have to make sure that your mortgage advisor that you're working with knows this stuff, pays attention to it, and knows how to time it perfectly when it comes to securing your interest rate lock if you're buying in 2025. So listen, if you found this video helpful, do me a favor, like, comment, subscribe. Even feel free to share this with someone that can benefit from this information. And if you want to have a conversation with us around your home buying journey, getting pre-approved, and just have questions, do us a favor. Call us, email us, text us. We're always here for you. Until next time, stay tuned.